Hey, it's Sarah Owington with Rooster Homes, bringing you the monthly market update. I'm going to try and keep this under 3 minutes so that you actually watch it and gain the value from what I'm sharing, but it doesn't take too much of your time. So I update this every month. This is updated as of today, the day of this recording, 9/12/2025. You have questions, we have answers. Let's dive in and see what's going on. So Daryl Fairweather, the chief economist at Realtor.com, Redfin states that today's mortgage rates already have the anticipated September Fed rate cut priced in. This means that when the Fed officially announces the cut, we shouldn't expect a significant corresponding drop in mortgage rates because they do correspond. As the Fed cuts rates, we always look for mortgage rates to take a little bit of a dip. But let's see what the leading data banks, Fannie Mae, MBA, and Wells Fargo, have to say about their projections for 2025 and headed into next year. So we start with Q3 of this year and we end with Q2 of 2026. As we can see, we have moderate decreases headed into next year, though we can anticipate below 6.5%. What I want to bring to you is from Mortgage News Daily. This is my go-to for what's happening with mortgage rates on the daily. And right now, the 30-year fixed rate is 6.29%. So, wow, that's the lowest we've seen it in 2.5 years. Again, that's all dependent upon your credit score, debt to income ratio, and there's a lot other factors that play into your pre-approval and the interest rate that you will be getting to purchase a property. So I will leave that up to the lender to inform you of what your specific rate is. All right, let's talk a little bit about inventory and home price evaluation. So Daniel Hale, chief economist at Realtor.com, says the housing market has cooled modestly in 2025, but the extent and persistence of rebalancing really varies across the country. And this is true. Regionally, home buyers and sellers are likely to experience a very different market. We see this in Los Angeles compared to national data. LA is a unique market. The absorption rate here, as far as turnover, with properties being active, going under contract, and selling, is about five a month. So 5 months of inventory right now. So we are headed towards a balanced market, which is very exciting. We are seeing more stability in the market because of interest rates. And this is a great sign for both buyers and sellers, because again, we want that stability. We want a more balanced market. But overall, we are seeing listing prices already starting to flatten and stabilize. We're not seeing that runaway appreciation, and we are not expecting a market crash anytime soon. We just don't have the inventory, especially here in Los Angeles. Next, home price growth is the slowest since the summer of 2023. So again, that percent change in sale price year over year is on the decline. We have a little bit of variability as we headed out of December 2024 into 2025, but it's been slowly declining since then. This isn't a housing market crash. This isn't depreciation. It's deceleration with home valuation. We are seeing national around 3 to 4%. Of course, in Los Angeles, it's going to be a little bit higher. We're seeing 6 to 7%. All right. Lastly, US home price expectations. Yes, we are seeing more moderate, stable appreciation, but here's what the leading experts are saying, that 6.7, 17, and 27%. This is the most optimistic as far as home growth. But we can expect again that moderate 7 to 8%, maybe even higher in Los Angeles. All right. Well, thank you so much. I'm Sarah Owington with Rooster Homes. Hope that was helpful. If you have any questions about the market, you want to deep dive anything a little bit more with me, give me a call, email, text me. When we serve, you succeed. And thank you so much. All right. Hope to talk to y'all soon. Bye for now.